You're watching today's video technical update presented by FX Times. It is Monday, May 10th, 2010. I'm Fan Yang, your technical analyst, and I'll go over some developments in the Forex markets. Gaps were plentiful to start the week. The $1 trillion rescue package put together by the EU and IMF gave the market a reason to get back into equities all over the world. The currency market reacted similarly at first, but divergence appeared in the New York session. Let's examine the euro-dollar, pound-dollar, euro-pound, and the pound-yen pairs. This video is being produced at about 2:40 p.m. Eastern Time ahead of today's U.S. session close. First, here's a look at the euro-dollar 4-hour chart. We saw the gap that started the week. And the market followed in that risk appetite induced rally here until right ahead of the New York session here. And then when we got into the New York session, we had a retracement and attempt to close this gap. We see the RSI held below 60, crossing back over. Actually, a negative reversal, suggesting a swing rally towards 1.24, just below that, maybe around 1.2350 area. So that's a swing projection. However, we see that this gap provides us with support, so it's going to be important to see if it can break below this gap. The 1.2760 level is important. Really, this coincides with the bottom of the gap, 61.8% retracement. So if the decline is able to extend past that, then there's a good probability that the market will continue at least to test this previous low here, 1.25, and then to test 1.2350 area. Looking at the 1 hour time frame, you see that all these the 1 hour time frame is the only one with the RSI that's bullish, broke above 60. You see the RSI in the 4 hour could not go above. In the daily, it's bearish. So in that 1 hour time frame, we do see this rally as possibly just a retracement. But the market has to break below. You see here, it has to break below 40 here in the RSI, and that would likely coincide with our closing of the gap, as well as the break of this, rising trend line, as well as your 61.8% retracement. Now I'm using the retracement by truncating some of the tails here, so we are pretty much right on top of the 61.8%. The market is closing up the gap, and if it could break below 1.2760 or 2760 area as indicated here as well, then the slide to 1.2350 is possible. Here's the pound-dollar pair daily time frame, and we see a lot of uncertainty here. We'll probably have another doji candlestick here for the opening session of the week. There's a lot of uncertainty about the leadership in the government as well, so that's reflected here in the price action. Here the RSI shows that it's bearish, although there's some very near-term support, and we saw that the market rejected a decline below 1.45. Actually, the market wasn't even able to close below 1.48. Now, if the market closes below 1.48, then we may see the market chew this tail up and continue back to 1.45. But at the moment, we have to wait for the market to close below that. Here's the 4 hour time frame, a possible swing projection suggested by the negative RSI reversal. So here is the bearish scenario in the short term. And the bullish scenario is on the shelf right now, but if the market can break above this previous resistance support, turn now to resistance. So if the market basically breaks above this zone, above 1.22, then we could start talking about the bullish scenario in the short term, and possibly eventually in the intermediate term. But for now, our anticipation should be bearish, and this should be the swing projection suggested by the RSI. In the 1 hour time frame, further confirmation could be this knee action, so the market RSI tests the moving average, and if it doesn't break and continues lower, breaking below 40, that's also a sign for your bearish continuation. And we see that in the daily. That would mean a close below 1.48 and a possible decline to eat up this tail to reach 1.45. Any euro crosses has been very volatile last week. Euro pound, one of them, and we saw this huge volatility on Friday, and then we saw today we saw a gap up and the market's attempt to fill the gap, which is successful, by the way. So here's looking at the 4-hour time frame. We saw this gap, market jumped up, and at the end of the trading US trading session, we have closed that gap. Okay, so we are still bearish on the euro pound. There's, this rally apparently is just a dead cat bounce. The RSI here remains in the bearish range. You see the 60. You see actually the range, because the euro pound is very choppy. The upper range is actually around 64.50. So you see this goes back here, and the RSI has always topped off there. Again, it's topping off, continuing this bearish mode. Okay, so market is going looking to continue sliding down. These very bearish candles indicative of that. In the 1-hour time frame, we do see that we are about to confirm our bearish scenario here. If the market here, the RSI breaks below 40, and here we are seeing we see this double top, and the market is consolidating a bit at the base area. So here we had a break, we have a pullback, and we may now continue to decline. In the coming session, European Asian session, we may see the market decline to here. But as we look at the daily time frame, we can anticipate the market retesting this low here at 0.8450. Low here. 1-hour time frame, you see this as well. You see that this is also a pattern breakout projection. The width of this double top projected down here. So 0.8450 appears to be the next support after the break of 0.86. So the market, if the market closes below 0.86 in the next hour, we may have a decline towards 0.8450. The pound-yen pair is in somewhat of a consolidation, and after last week's major decline, the market has pulled back in 2 days of rally. Looking at the 4-hour time frame, we see these 2 days of rally come to the 61.8% retracement. If the market can actually break above this, and we see that there's moving averages here, so if the market can break above these moving average 142.40 area, I would say even if it breaks 144.50, we should start thinking of the bullish scenario. But for now, it appears that the market has kept resistance here. So for the bearish scenario, we see that the next move may come down to retest this low here. I don't know if it could actually make the previous low here, because this spike was kind of weird. It's very risk event induced. So I would look for it to come around, at least try to test the bottom around 133. Now for that bearish scenario in the short term, we may need to see the market come down and break these levels. This rising support, 61.8%, and we would also see the market here break below the RSI here, break below 40 as a Q. So those are your bearish Qs. The market breaking below this trend lines and 61.8%, and RSI breaking below 40, and that would probably accompany a swing down to retest the former low here around 130, around 133. All right. And that wraps it up for today. Visit fxtimes.com for more analysis updates and live events. Once again, I'm Fan Yang, your technical analyst here at fxtimes.com, wishing you good trading.